Welcome to Get Serious. Excited to be back here today. I wanted to give you a few updates on just running through some test properties for LandPricer here, and just how I'm kind of orienting around what adjustments need to be made for max accuracy. So it's really been a balance there. I know from our first, really the goal from the start has just been focused on accuracy and reliability of pricing properties. Like that's something we think we do better than any other firm in the industry, or at least within the absolute top echelon, especially from a national basis. And we have the track record to back that up. And so that was really the impetus for building this product. And we also quickly realized like that's not quite enough. Like the property or the software needs to be easy enough to use, and quick enough to use, still justify people to actually go through the exercise of pricing properties. Like if it took you a year to price a property with 100% accuracy, like no one would do that, right? So we didn't match that time time block that typical users would allow for themselves, to still arrive at a mostly accurate answer. So we were just trying to maintain that high level of reliability and accuracy while we reduce the amount of time required per property. And we've definitely got it below 5 to 10 minutes. And like I've tested it myself to do that, to get below that that number here. And so as I was going through and the way that I'm structuring how to ensure that things are like fully accurate is that I'm taking properties that we've actually funded, and so we have a full written report on our diligence. And ideally some of these properties that we had funded both are more recent, so the comps are still going to show up in a reliable manner. There's still going to be recent comps. Like if we did a property we funded 3 years ago, not that we were funding properties 3 years ago, almost. Like those comps wouldn't show up because they're no longer relevant. So we could manually add them, but still not as helpful as a recently funded property. So we have been doing that. So the correct comps are going to be showing up. And ideally, we've already gotten offers on the property. So we have in a couple of these circumstances. So that's kind of the gold standard that I'm using. It's like, okay, we have a property we did a full review on, we actually funded it, plus we got offers, and at least anticipating selling the property, so we know the true accuracy of our measurement and that our buy price was truly accurate in relation to the market. So you can't ask for better data than that. So one property that we had recently funded, and I talked about on the last podcast, this Illinois property. When I run it through LandPricer, it's off by roughly 20%, the price calculation. You really can't hold that number in too high of esteem because unfortunately, like there's too much noise within the calculation. Like there's too many bugs that are being fixed as I speak during this podcast. But even when all of those are fixed, I still think it's going, or the current LandPricer is overestimating some of the value of the comps and therefore overestimating the value of the underlying property. So like I never expected that our, back end weights and mathematical formulas were going to be 100% accurate, like without thorough and rigorous testing. Like they're always going to need continuous tweaks. But I'm starting, based even on this initial buggy review and even accounting for that, I can already start telling why the pricing is being overestimated by a bit. And like, we don't ever expect either to be 100% pinpoint accurate too, because there's too much variability within the market. And even within our own manual comp reviews, we treat it as a win if our exit price is within 10% of the anticipated exit that we had written down before we even funded the property. Like if you can be within 10%, that's generally going to be what you could consider to be very accurate, just because like there can be so much flux, like even in negotiations. Like for instance, this Illinois property we were doing, like we bought it just under 60K, or like right at the 60K number, including closing costs. And so like the initial offer was closer to like 118K. Like it was fast. I probably would have taken that if the buyer was just dead set on that number. But like we ended up getting them closer to like 127.5. So that's almost a 10% swing in and of itself. But that really was just, fluctuating during the negotiation period there. But in terms of what we thought would be a favorable result on a property, like either of those numbers would have worked. Obviously the higher one is better, but like you can see that the value of the property was still like within this, roughly 10% um, variance. In fact, it was even higher because we got a 140K offer, but it was contingent on a house sale too. So that, is even an increased value on the property, more than we thought it could be worth. That was even higher than our listing price, which like never happens in today's market. So that's a bit of an outlier there, but that's just to show like you can't really ever expect to be like 100% pinpoint accurate, but if you can be within 10%, especially on the downside scenario. So like it doesn't really matter if you're 10% above what you thought or 10% or more above what you thought the exit price was going to be, because that just means you made more money. Especially if you already bought the property. Yeah, it could affect it. Like if you're using LandPricer and you're underestimating the exit of the property, you might, lowball the seller too much that, keeps you from purchasing a deal. But rarely people run into that scenario. Almost always people are overestimating the value of the property, and that's like by far the worst possible mistake to make, because you get stuck in a really nasty scenario and potentially lose money or get stuck with a property that's not moving. We always orient to be more conservative towards downside protection versus overestimating the property's worth. That was just kind of like, my thinking behind, okay, what do we need to get to? So if it was like 20% overvalued, it's like, okay, I need to be able to shave off at least 10% more from the value of this property to feel like we're more accurate. Like it's not too far away. So it's already telling me like my math is pretty in line here. But as I was going through it and seeing all the back end weights, and there were, like a lot of areas in the country, like there's a ton of active properties. Generally, there's going to be more active properties. Like the sell-through rates have just not been very good in many parts of the country for like most of this year. So I'm expecting there to, on average, be more active properties being considered as comps for a lot of areas of the country. And generally, for active properties, all things being equal from a characteristics perspective, we want to undercut pretty much everything on market. And usually I'd be, especially, again, subdivides are maybe a bit different story, but even if it's a one-off parcel, like unless my characteristics are crazy superior, I want to be undercutting the active market as a whole by, at least 5 to 10%, at least, and potentially more. So that's why, like, as I was going through the LandPricer mechanisms, like I had a lot of just harsh penalties on active properties. Like if anything's been listed even for longer than 14 days, like it already starts getting hit a bit harder. But I think I need just a blanket hit on just being an active property outside of any, like even if something's been listed for a day, like it probably serves better to have like a 15% just blanket discount on that price, and to account for like more user error when you're trying to judge some characteristics. Like that's another discussion, but that's probably still the trickiest part of LandPricer right now, at least for the current iteration of the product, is that you have to be able to judge the characteristics of the comps in relation to the target property. So that's by far the most time consuming part, but we still try to make it a drop down. And even myself, like, some properties, it's a little hard to determine. There's a lot of variables involved. So I'm trying to reduce the potential user bias from those calculations as well. All of this to say, like, there's some more finesse that is needed here to really get things in line. But the biggest takeaway at the moment is I think I just need to penalize active properties in and of themselves more so than usual, because like, even if you have some built-in discounts, I mean, anybody who's been in the land industry for a while, like you can just have these, active properties that are listed for 2, maybe even 3x the going rate of the per acre pricing in the area. And even if you like significantly discount those, they've been sitting on market for a while, but like, let's say that's not like, somebody just puts a fresh listing on it, 3x the going rate of price per acre, and it's not really penalized for doing that, that can just drive the average per acre pricing too high in relation to the subject property and what like an appropriate sold price would actually be, and the corresponding buy price if you're actually trying to acquire the property. So I'm really trying to keep that in mind, and I have some, I just walked through some ideas and how I'm going to fix that. But again, I just want to give you guys some behind the scenes on how I'm making these adjustments, and again, just using gold standard criteria, because it's like, yeah, if I have true, real info based on how our own properties were priced and actually performed on the market, like that gives me the best data possible, because then I can just tweak to get the right answer from the math side and feel much more confident that it's going to work across multiple parcels all across the country. And again, we're only like 10% off from being within that, plus or minus 10% window of true pricing anyway here. So like, again, that's going to be the goal. Always, the closer you can reduce that variability, the better. But again, we think we're like the top underwriters or close to it within the industry, and like 10% threshold is our goal. So we think that is probably good enough for everybody else as well. So hopefully this one is interesting for you all. Excited to deliver more value, both on the behind the scenes as well as launching the product itself very soon. SeriousLand.capital for any of your funding needs, $50K purchase price plus, and Land Daily Diligence Facebook group for zero cost review of your land deals, and LandPricer.AI, which I just discussed, most reliable land pricing tool on the market. Subscribe and share, everybody. Enjoy your holiday weekend. I will be back next week. Take care. Bye.